Hello, everybody. Coming to you from strangely warm Connecticut, where in the middle of February it's 65 degrees and it should be snowing and cold. My name is Mark. I am the stock market jobber, and I am on a mission to teach people like yourself to learn about Wall Street and to learn how to trade. I have a pretty good background for this. I traded directly for Steve Cohen. I traded directly for Mary Gabelli. Those are two of the greatest money managers in history. I was a head of trading at three different institutional money managers where I oversaw all kinds of trading strategies and including hedge funds, yes, and I was even a market maker for a time. So please subscribe to our YouTube page here and please check out our website, stockmarketjobber.com. And let's take a look here at the Spider or the Spider S&P 500 ETF. This is designed to track the S&P 500. And the S&P 500 is the most important index or benchmark on Wall Street. Most firms use it as their benchmark to measure their performance. And we've broken our uptrend. We could be on the beginning of a new downtrend here. I think there's a good chance we get down to 390. Now this chart shows all about how some price levels are more important than others, okay? And that's one of the things that we teach at Stock Market Jobber. In the institutional trading world, okay, in the hedge fund world, market makers, no one uses this garbage like Fibonacci or Elliott wave, or Gann theory, harmonic charts. I mean, my opinion is if you want to read about science fiction, there's Ray Bradbury, there's other things, Isaac Asimov. In the institutional world, what we care about are market principles and market fundamentals. These include what price levels are important, what's the trend, what's the momentum, and what is the psychology of the market. All right. Now, we can look at pretty much any chart and see psychology. Now, you might be saying, I don't get what you mean, Mark. What the hell are you talking about? Well, let me show you something here. This was a support level. When the market got down to this 390 level, it was support. This means that there was more shares to be bought than there were to be sold. When a market's moving lower, like S&P was here back in August, it's because there's not enough demand or buy orders to absorb all of the supply or sell orders. When we get to a support level, well, the tide turns. All of a sudden, there's a lot of buyers around or buy orders around. We don't know if it's a couple really big buyers or just a bunch of little, a lot of little small buyers. But regardless, when we get to a support level, the tide turns. And things tend to rally off of support because some of the buyers start to get anxious. They start to realize, oh, there's other buyers around. That's why the market's not going lower anymore. So I'm going to try to raise my price that I'm willing to pay and get ahead of them, and that forces the shares into an uptrend. Now we see support here, and look here, it became resistance. Now, resistance is the exact opposite of support. When a market's moving higher, it's because there's not enough supply or sell orders to fill all of the demand or buy orders. We have to look at every chart through the prism of what does it tell us about supply and demand. All right? That's why those other methods or quote unquote methods I just referred to aren't really legitimate. They don't tell us anything about supply and demand. And if you make money off of them and you want to do them, that's cool. I'm not telling you not to, but I'm just telling you what goes on in the institutional world. The best traders that I've known, and I've literally known some of the best in the world, they would laugh at you if you started talking about that stuff. So anyway, when the market's moving higher, there's not enough supply to fill all the demand. And when we get to a resistance level, that changes. Now, the question is, why is there resistance at a level that was support? And the answer is investment psychology. It's because of buyer's remorse. There are investors who bought back here who regret doing so once the share price went lower. And a lot of them tell themselves, I made a mistake and I want to get out of this position, but I'm only going to do so if I can get out at break even. So I'm going to try to sell my shares at the same price I bought them at. So remorseful buyers placing sell orders at their buy price can convert the support level into resistance. Now look what happens here. Resistance converts back into support. How does this happen? Seller's remorse. It's the opposite. Investors sell when the market goes lower. They think they did a good job, but when the market goes higher, a lot of these sellers tell themselves, man, I made a mistake. I'm going to buy my shares back, but I'm only going to do so if I can get them for the same price I sold them at. So remorseful sellers placing buy orders at their selling price can convert what was resistance into support. So resistance support can become resistance because of buyer's remorse. Resistance can become support because of seller's remorse. And this shows you that this particular level of 390 is important. Now, why is 390 important? Why does the S&P like this level? I have no idea, but I don't need to know. I don't really understand how electricity works, right? But when I flick the switch, I know my light's going to come on. Anyway, we have resistance up here. This 410 is also an important level. And sometimes when we get a little bit of a breakout here, it takes a couple days to see where the market's going to go. And for a few days, this resistance turned into support because of the seller's remorse. But now we're kind of trending lower. And yesterday's action, I think, was pretty important. There's really no rebound today. I think that the next level to target is probably 390. There is a chance we get a little bit of a move higher, but I think there's a good chance that the 410 level turns back into resistance and we go lower. All right, everybody, that's it. Once again, I'm the Stock Market Jobber. Please subscribe to our site here on YouTube. Please check out our website, stockmarketjobber.com, and I will see you all soon. Thanks, everybody.